let's talk about the jobs numbers and why I think the jobs numbers are starting to weaken and we need to pay attention. Also, we need to talk about some research that a company named Trepp put out, and you could go ahead and Google that yourself. But there's a lot of stuff going on in the market that we have been talking about, and it just keeps coming our way. This is the daily financial news for Sunday, January 7th. I hope you have an amazing day. Let's get started. Let's first talk about Trepp. There's a lot of data analytics companies out there in the real estate market. Trepp happens to focus on commercial real estate. A lot of us have been talking about the pain coming. Jonathan Twomley and I showed you how a $100 million property could become $46 million with very small tweaks. We've talked about syndications blowing up, but I have a surprise for you. According to Jonathan Twomley's interview on Thursday and then researched over the weekend, Trepp has highlighted that multifamily pain is greater than office pain. Now, Michael, how could that be? Office is a disaster. Well, there's a couple of things you need to know about the multifamily market versus the office market. First and foremost, the multifamily market is bigger than the office market. I would argue much bigger than the office market. Second, and this is the real rub, the multifamily market became the financial engineer's playhouse where assets were retraded and run up, and people were overpaying and celebrating low cap rates and just doing dumb stuff because money was easy. That generally doesn't happen in office. The buyers of office buildings historically have been pension and insurance companies. These organizations typically put down 35, 40%, 10-year leases, a completely different animal. So, we've been talking about it. It's on the horizon, but I don't believe a lot of people understand. Again, according to Trepp, go ahead and Google it yourself, multifamily pain is greater than office pain. I bet that would catch you by surprise. Next up, let's talk about jobs. Again, we will talk about Friday's number because we did not record. Friday's number came in at 216. If you saw my interview with Ty that does the weekly wrap-up, I indicated any number over 200 would be a problem. And sure enough, we got a number at 216. Yields raced higher. More on that in a minute. Unemployment did not go up as expected. It stayed flat at 3.7. Wages came in a tick hot. They came in at 0.4. And then the participation rate went down. The participation rate went down to 62.5 from 62.8. The job market is still strong. Again, on the surface. The other thing you need to know about the number we got on Friday is it is the most backward-looking number. Here's a couple of facts you may not know about the jobs market. Did you know 10 of the last 11 jobs reports were revised lower? 10 of the last 11 revised lower. Part-time jobs made up 762,000 of jobs created in 2023, while full-time went down 1.5 million. So I believe the job market is showing early signs of cracking, being tired. Why do I say that? Well, on Friday, we also got the all-important ISM number. Now, typically, the ISM number is really not market moving, but when it comes out and says something completely different than the jobs market, you have to pay attention. So what did the ISM number on Friday say? 1, prices paid plummeted. Think deflation. Prices paid plummeted. Employment was weak. New orders, weak. I would again advise you to look at the ISM number is slightly forward looking, where the jobs number we got on Friday is clearly backwards looking. To use a car analogy, The Bureau of Economic numbers on Friday are the rear view mirror. ISM is the windshield. So again, ISM is telling us the economy is struggling. The Bureau of Economic Labor and Statistics is saying, hey, we're still good. 216,000 jobs created in the month of December. Remember though, 10 of the last 11 months revised lower. So I don't think the job market is as strong as the headline numbers would make us think. So again, I talked about the ISM number. What happened? Bureau of Economic Labor and Statistics come out. 10-year note jumps over 4%. ISM number comes out, I think, a half hour later. 10-year note falls, goes negative, like 4.04. Then at the end of the day, it does go higher, because I think what is going on is the market, the smart money, is starting to price out the March rate cut. And I think people are starting to coalesce around May or June. More on that in subsequent financial news. Let's talk about the 40-40-20. What the heck is that? This is apparently Grant Cardone's entrepreneur playbook, right? This is definitely for entrepreneurs. Basically, you set aside 40% for taxes. Then you save 40% and you live on 20%. Wow. I know a couple of people that can live on 20%. I could not live on 20%, certainly not while I was working. But this is definitely, I think, an entrepreneur's playbook, right? A lot of folks out there are being entrepreneurial. Don't forget you owe the IRS, whack 40%. If you can, again, save 40%. This is a big deal to me. This is discretionary income that you then could become an elite investor and invest for cash flow. And then if you want, ball out on the last 20%. Let's talk about the week ahead. It is Sunday, so what do we have coming at us? Well, we have a lot of data. The most important day will be Thursday. We will get consumer credit on Monday. We will get the trade deficit on Tuesday. We will have a Fed speech on Wednesday. And then the big day is CPI. What is going on with inflation, both headline and core, both year on year and month on month. Let's remember that CPI, when you talk about the base effect, is very, very small, meaning the number that's rolling off is very small. It should not surprise anyone that perhaps CPI goes up 1/10 because of the base effect. But the next month, so not the one we get Thursday, the one we get in a month, that is when I think CPI headline goes under 3% because it is a big base effect. And then on Friday, we will get PPI. Folks, I hope you have an amazing day. Just so you know, we have 5 new investor interviews scheduled today. I appreciate all the new investors. If you are a new investor and you want to share your story, you can reach out to me via direct message on Instagram, on X or Twitter, or if you'd like, you can just go to my website, onerentalatatime.com, and send me an email. Well, I like to schedule them on Sunday. I hope you have an amazing day. I need to go update my goal spreadsheet because I owe you a weekly update of what's going on with my 2024 goals. Take care. Have an amazing day. Bye.